Maruti stock has been a front runner for the last several days, and the numbers that the company has released, India's largest automaker, for Q4 and FY24 justify why. Stellar set of numbers, revenue up 19%, slightly below Bloomberg estimates, but doing very well. EBITDA up 39%, margins have increased 180 bips to 12.3%, and net profit up 47.8%. Plus, Maruti has announced its highest ever dividend of 125 rupees per share. We're speaking with the big man himself, RC Bhargava, today on the numbers. Mr. Bhargava, always great to speak with you on NDTV Profit, and especially in a quarter and a year that the numbers have been so good. Let's begin with exactly that. What has happened this quarter? Have all the stars aligned? Because, of course, your SUV sales have driven all of this, but even input prices, commodity prices, everything seems to have come together.
That's absolutely correct, Tamanna. You know, the commodity prices have remained benign this year. Our volumes have gone up because we had added new capacities. The exports have been going up, and the foreign exchange situation has remained favorable. And this year, this is something which is not widely known, we had the maximum number of suggestions from our employees. We crossed 1 million suggestions which were implemented, and they gave us a profit of another 750 crores or so because of these cost-saving efforts. So all these things came together, and the result was what you have just mentioned.
Let me just talk about your margins. While, of course, the overall numbers look very robust, I wouldn't even say concerns, but I suppose higher expectations perhaps on margins, which have come in at 12.3%. I believe in the con call, you know, the company has also talked about a one-time impact. Can you elaborate on that, Ms. Bhargava?
See, margins is something which I always feel a little hesitant about commenting, because many factors which determine margins are not within the control of the company itself. And if margins have gone up, you have to look at what's happened to the yen, the dollar, the euro. You have to look at commodity prices. You have to look at the non-operating income. So many factors which we don't control. And so it's good to see margins go up. What is more important is the efficiency of operations within the company, the factors which we control. I think the best any car company can hope to do is that in the areas which are within their control, how have they managed those areas? If the costs go up because the commodity prices are shot up due to some war, something, or some demand going up somewhere, or some mine closing down, it's neither a plus nor a minus for me.
So having said that, do you see as a forecast margins improving as and these revenues and these sales remaining as robust? I'm trying to understand if FY24 was just one of those lucky years, or you're seeing this momentum for a large company like Maruti sustaining.
I wouldn't like to comment on what margins would be in 24-25. All I can say is that in the areas which are within Maruti's control, we will try and do better this year than we did last year. But what the final result would be, as I said, depends on various factors which we don't or can't control.
Let me just get your sense on the dividend. Of course, investors will be very happy with it. It's a 40% increase in the dividend payout at 125 rupees, the highest ever. What was the thought behind this, Mr. Bhargava?
You know, we have a dividend policy, and this dividend which we have paid out actually comes to 30% of the earnings. We could technically, within that policy, have even given a higher dividend. But one of the considerations we had in determining the dividend amount was that it should be a dividend amount which we can sustain in the future also. Personally, none of us are happy with the idea that you suddenly give a big increase in dividend and the next year you can't give that dividend, you have to come down a little. because profit levels have not been at that astronomical level as you had in the previous year. So we have kept ourselves a little flexibility, a little margin, so that we can sustain this 125 in the coming years, irrespective of what happens, at least this happens reasonably in this next year. And that has been one consideration. The second consideration, of course, is that if this itself is a 40% increase in the dividend, huh? And if you give a very big dividend increase, then the shareholder tends to expect that in the coming years something similar will happen, which we may not be able to do at all depending on how the results come out. So we have tried to keep a somewhat balanced, somewhat sober approach to dividend and not gone overboard because profits jumped so much.
Now, let me come to the broader picture and what has really worked for Maruti, I suppose. Tell me what you think. The way I see it is a very successful pivot to the SUV segment. That's about 57% increase in that segment. The small and mid cars sales have come down a bit, 11%. You see that trend sustaining? You've caught on that trend at the right time and managed to move to it with scale, looking at how demand is moving. You think this SUV craze will sustain? And tell us if you also think that that's the key reason for the great numbers we're seeing.
I do think that the demand for SUVs is going to remain strong for some years to come. I don't think that's going to change so fast. But I also think that like what's happening in the two-wheeler market, the customers are now coming back into the two-wheeler market, and the market is reviving and will shortly, I think, cross the best they have done ever in the past. Once that happens, I also expect that after that, customers will gradually also start coming back to the small car market. And I think when that happens, Maruti volumes will tend to increase at a faster rate than the rest of the industry, because by that time we will have capacity to take care of demand both in the small car segment as well as in the SUV segment. We are increasing capacity, as you know, in Kharkhoda, in another new site. We have added Manesar 100,000. We're started work in Gujarat in the Suzuki, what we've taken over from Suzuki. And by the end of 26, we'll have another 250,000 units there. So we are creating more capacity in the expectation that the Indian economy and the Indian market will grow, and that the growth will not be just confined to one type or one segment of the market, but will become more broad-based.
So do you see the demand for small cars coming back? What are you going to make largely in all of this capacity or increasing? Is it going to be more hybrid vehicles, EVs, back to the bread and butter small car? Just give us a sense there.
At the moment, the major increase in demand in the market is all for the SUV segment. And so the bulk of the increase in production this year, I think, will have to be in that segment. The small car market demand will maybe remain the same or roughly the same as last year, and I don't see very much growth happening there. There will be some growth in the other segments, the sedans and the upmarket hatchbacks. And of course, exports will grow by another 20,000-30,000 cars.
I just want to come to you on the question of inventories. And of course, sales have been great. But when we speak to the dealers, they talk about how inventory levels have gone up. Can you explain from your point of view why this mismatch or what is going on there?
Actually, there's not a mismatch. A dealer is required to keep inventory of 1 month's sale spread about different models, because without that inventory, it's impossible for a customer to come to a showroom, order his car and get it within a few days. Because if he has to order it from the factory and that the car has to be manufactured and shipped, then customers will have to wait a long time. Therefore, as a policy, right from the beginning, Tamanna, we have said that dealers should keep 1 month's sale as their inventory. These commission which they are allowed on sales includes the interest cost of 1 month's sale. So it's not that they're paying anything out of their legitimate profits. What dealer, if I was a dealer, of course I would want smaller inventories, because smaller inventories would mean lesser interest outgo, and I'll make a profit which would otherwise, or which is otherwise required to go as interest on inventory. But that would be at the cost of convenience and satisfaction of the customer. So we are very keen that dealers maintain this 1 month's inventory, which is what they are required to do. What they have today is still less than 1 month's sale. 1 month's sale today is about 150 to 160,000 cars. No dealer has an inventory like that.
So, the inventory levels apart, I was interested in seeing some of the statements that came out of the press conference as well, Mr. Bhargava, where you talked about the target to sell about 6 lakh CNG cars in FY25. While the craze right now is about EV, Maruti has not really gone whole hog down that path. You've talked about hybrid, you're talking about CNG, and of course you're coming up with your electric car as well. Tell me about your plans of CNG. Do you expect a larger uptick there? Why the focus there?
The customer has shown that he likes CNG cars, the small car customer especially. And what are the options for a small car customer? He doesn't get a hybrid because it's much too costly for him. He doesn't get EVs because in many ways the small car owner is handicapped in having an EV in terms of infrastructure, charging facilities, cost, and all of that factor. So he looks for the cheapest option. And amongst the cars, if you have a petrol car or your CNG car, the CNG car is a lesser cost option for him. So customers do prefer CNG cars. We have gone to CNG for the hatchbacks and the upper class hatchbacks to give more customers more options to reduce the cost of maintaining a car. So that is why CNG cars are going up. They, of course, are cleaner than pure petrol cars.
And what about hybrid cars? Will we see a swift hybrid anytime soon? Will we see more hybrid models before we see the first EV rollout?
Tamanna, the first step which has to be taken is the government policy on GST on hybrids. Today, hybrids cost 43% GST. Mr. Gadkari has made a statement about this matter, but we have to wait till the elections, till the GST Council meets and sees what decision, if any, they take on changing the GST structure for hybrids. Once that happens, then every company, including Maruti, will have to look to see at what level and what cars can be hybridized. Separately, there is a lot of research work being done in Japan by Suzuki on developing modified versions of the hybrid technology, which could be more affordable for small cars, but would still give substantial improvements in fuel economy for small cars. So these are not immediate things. They may take 2, 3, 4 years to come, but they are very much in the minds of the car companies and those who plan future products.
Just one last question. I know, you have a long list of interviews to do today, Mr. Bhargava, but everyone's waiting for the Maruti EV. The problem with the EV movement is that on a smaller base, of course, the numbers look great. And in two-wheelers, they're flying. But when it comes to passenger vehicles, the average buyer is saying, why should I pay so much more? I love the environment, but where will I charge it, the cost, etc. Is Maruti waiting for this to settle down? When will we see the Maruti EV? Will it be at that sweet spot of affordability and, really giving you bang for the buck?
We are not waiting for anything to settle down. It's just that the development of the car and all that goes with it has taken more time than others. We started late. We didn't start late. We started with a small car. The Wagon R was electrified, but it was far too costly. Then Suzuki shifted and started developing electric cars on a bigger platform, which were more suited to electric vehicles. And that development is now fructifying in the Gujarat plant by the end of this financial year. This car will be an SUV type of car, I think, and it's not going to be a car for the lower end of the market. It's going to be for the upper end of the market. As we go along in the future, depending on how the market goes, we'll have to see what happens. But I don't still see us producing a car which will meet all the, doubts and uncertainties of small car owners about electric cars. I think there has to be further breakthroughs in technology for that to happen. I also feel that it will also become a more practical thing for electric cars if electricity generation becomes much more from non-fossil fuels than from fossil fuels. Because fossil fuels ultimately are not clean either.
You don't sound very convinced about the EV. Why is Maruti coming up with one then?
No, we feel that without EVs, we can't meet all the requirements of CAFE and the carbon reduction norms, that they are an essential part of every vehicle owner's repertoire of vehicles. But we also feel it, in the current situation in India, electric cars by themselves are not the answer to reach the goal which the government has set of reaching zero carbon emissions, because of the way the electricity is generated, and the way the customers are in this country. Biogas offers a very clean option, a very economically worthwhile option for the customers and very suitable for small cars. I think we will definitely want to push biogas cars instead of CNG cars ultimately, to the extent we can use because biogas and CNG become interchangeable. Biogas is clean, CNG is not clean. That's the big difference. If we want to use that, we want to use ethanol. India has a huge potential for biofuels. Why don't we use that? Because that is more suited to our research, and our resource endowment is better suited to the profile of our customers in this country. So we are not one technology driven. We are looking at multiple technologies to get the same end result as the government wants.
All right, everyone's waiting to see the EV from Maruti stable. Thank you so much, Mr. Bhargava. Always a pleasure speaking with you.
Thank you, Tamanna. Thank you for this conversation.
Thank you.